So I was on Reddit, saw a conversation happening on somebody asking why a trade failed. And there were tons of replies and comments about why. And everybody had like a different idea about it. And when I looked at his trade, as far as the strategy is concerned, like basic, something that could have worked if it was in the right context. But also why it fails may not be your strategy, but may be where you're using it. So when we do drills, that's kind of into. All right. First of all, this is February 24th, 2025. I'm looking at go straight through. Okay, here we go. So we've got previous day low, Asia session high. We get it wiped out both. You get a low here created in London session. It sweeps the Asia session, and then it goes for the high in Asia session. And if we're basing our strategy on New York session, then we should be waiting for a sweep in the London session high or the London session low, and then looking for some sort of reversal. And so we don't get that here. We get just a past that London session low, and then it keeps going. In this case, you can look at this and say, all right, there's no move for me to get into on this day. And that is probably the best way that you should handle this, especially when you're just starting out. Okay. Whenever we're dealing with different sessions, you have your general session. You're going to have your general session, which is going to encompass the entire time. So for the London session, we're looking at from 12 to about 8 a.m. That's the overnight session. And then for London kill zone session, we're looking at 2 to 5 a.m. So that's why you can see in some of my examples, those highs are going to be in different places at different times. And I'll take very specific ones. And generally, I would still want the general session versus just this session high. I really just want the higher high of the two to be taken out. There's probably more energy. But if I looked at this is MNQ. If I looked at the ES, there might be an SMT here. And that's maybe why this wasn't taking out. I'm not going to look at that. But somebody can if they want to. And so the end didn't go to take this high, but it did take the kill zone high. And that is this previous session before the New York session. And then we have after that sweep, because let's not forget, displacement happens. It's a really short one, but it fits all the measures and all the rules. And then you've got a retracement, just absolutely tiny right here. This fair value gap, market structure shift from this displacement, retracement, fair value gap right at the London session high, kill zone high, right? And then you've got intermediate highs here, move for profit taking, but I would be much more interested in the London session low, the kill zone low here, and take profit 2 would be on the general session low on the London session low. I really like this day as an example to go ahead and through and study and drill, because you have a lot of different things going on and a lot of ideas that are playing out. So you have Asia session has been swept on both sides by London session. And now we understand that every session has a general session and has a kill zone session. So London makes a new low and a new high after sweeping Asia high low of the general session of London. And then once we get into the kill zone of London, it really doesn't do anything. It just consolidates, right? And then New York session happens. So we're getting into 9:30 here, right? You get a sweep in the New York Open, London kill zone session high. It does not run to the general London session high, and it immediately displaces, creating a market structure shift. And you're taking out lows as you go, which is very strong for continuation. It's not a main low. These are just intermediate internal liquidity lows, just kind of feeding its way the London kill zone session low. ultimately to go to the previous day low. So liquidity, displacement, retrace into this tiny fair value gap, and then drops, take profit one, here, London kill zone session low, and then you have this candle just squirt basically up. This huge wick all the way up. And that's kind of normal for, honestly, in my opinion. But it doesn't happen until after liquidity is taken. So this is one of the things, if you read on my Reddit, when I talk about why I get out at take profit one, majority of the time, it's because it is a high probability from that point that you're going to see some type of retracement or reversal. Okay. And what do we get? We get a huge retracement here. I mean, almost taking out. If you have here, which is where you should have your stops, right? It went for them, and you probably might have gotten out of this trade because of how fast and how hard it moved on you. But if you're like me and you came out on take profit one because that's just kind of what you do, and safe. But do move to take profit two, London session low, and ultimately previous day high is taken and more. Okay, now I like this day because it's something else, and this is afternoon session. So we're talking about after lunch session. You have the market beating against previous day low, and it does not want to break it. And so I'm looking in this scenario, we're in the afternoon, we had made new lows, day low, so just highly influential um area right now with the previous day low. We've got afternoon New York morning comes back up, retraces. I get a sweep of this high. I get a market structure shift. I get a displacement. I get displacement here and a market structure shift. And I do not have a clean area in here at all. There's nothing clean in here. Everything is kind of, you see all the wicks, or the candles are overlapping. There's no clean in here. So, this is the thing on this day in an inverted fair value gap immediately after displacement, and that price comes back and starts selling off again. But this was enough. I mean, there's nothing else in here. Everything is, so there's no imbalances or anything like that. This is just an old imbalance that was basically just being recapitalized because there was nothing else to capitalize. Then you have immediate low, take profit. Much more interesting are these lows here, but I'm going to go for this low. It makes more sense to me for TP2. I am more than likely just doing this, and that's all for the day in my strategy anyways. But you can see that this day is giving a lot of room to run. And so there's a lot of energy as there is multiple there are a lot of ticks on the table in this day. They're just kind of being recapitalized. And so let's recap. Do not get London session high in the New York sweep taken out, the general high, but we do get the kill zone high taken out, and that's enough. Displacement, market, we get a retracement, and it goes all the way down previous day low, but it continues. And then afternoon session, you get a liquidity placement, retracement, expansion, take profit one, taking out New York opens lows, the morning lows with the afternoon creating new lows. So this is just a really good example of a day because there's so much going on here. And kind of from a drill perspective, there's a lot from it. But at the same time, this is a clear picture of how a morning session can look on a sell-off and then an afternoon continuation into that sell-off. And it does it, I mean, it's not pretty, but it's kind of what you want to see when you're trying to get into multiple trades in a. This is two, really. This is two really good trades. Given that your bias is going to be selling and going for lows, This gives you two really good opportunities with, I mean, you're talking about this is a 200, is another, you know, 150 point move here. Just come out on take profit of these. You're talking about 20 to 30% of these moves. It's a lot. Okay, I hope that is helpful. If anybody has anything about this chart, about this drill, please leave them in the comment. I'm going to do my best to get to each and every one of them, each and every question that you ask, the best that I can.